Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi wabarakatuh. Okay, today we are going to do a complicated problem, actually, a complex problem involving both mudharaba and istisna. Okay, now here is the scenario. Okay, here the Baraka is Islamic bank and it's giving a mudharaba financing to Jeddah Constructions, which constructs malls. Baraka provides capital of 200 million Saudi Riyal, and the profit sharing ratio is 60% for the bank and 40% for Jeddah Constructions. Okay. Jeddah Constructions enter into an istisna agreement with Saudi Arabian Development Authority for a project worth 300 million. So the project of the mudharaba is actually the istisna contract. Okay. So the profit from the istisna will be shared between the bank and the the Jeddah Construction, the client. The construction period is 5 years, which is the same in this case as the mudharaba agreement. The initial cost estimate for the whole project is 160 million. Percentage of completion method of calculating profits is used. Okay, so you use percentage of completion to take accrue profits every year. And in the third year, okay, the project cost went up. And finally, the project cost is completed at a different cost altogether. Okay. So what we are going to do is we are going to complete this table here, all right, from which we will calculate the profit and then we will take the profit share of the Baraka Bank, okay, which is 60%. Now let us start with, year 1. Here this column is filled up for you. This indicates that, for example, in year 1, the cost incurred in the period for the istisna is 80, all right, then year 2 it is 40 and so on, okay. So these are not cash flows, and these are the costs incurred by Jeddah Constructions. All right. So here we will start with filling up this one. You will just, in the first year, since this is the first year, the initial cost and the accumulated cost is the same. Now, how do you calculate the profit and loss in this istisna? So we use the percentage of completion method. How do you do that? Well, what we do is we take the cost incurred divided by the total estimated cost multiplied by the ultimate profit in the contract. Now, to do that, what we do is we need to list down the contract price, which is 300 million, which we get from here, and the initial contract cost, which is 160, which is here. So our estimated profit is actually the contract price 300 million minus the initial contract price of 160, giving us 140 million. That's the initial estimated profit. If I put my cursor here, you can see the, what you call the formulas in this area if you want to, okay. Now, so now how do we calculate is we just put a formula here. So what is the cost incurred to date? It's 80 divided by what is the total expected cost? It's 160. So I just reference it to this cell H8, and we multiply it by the profit. The profit now stands at 140. Okay, so I multiply by the H9 to give us 70 what they call million riyals. Okay, now the bank share, remember, it is Rabul Mal is the bank and it gives 60%. So if you go here, you'll see the formula is 60.6 multiplied by E15, which is this place here. All right, so 60% times 70 is 42. That's the bank share. Now we are going to fill in one more column. Okay, this is actually the balance sheet value of the work in progress. Remember, in an istisna we accumulate the costs. Okay, we accumulate the costs, which is basically material, labor. All right, and also we include the accrued profit, the percentage of the total profit which have accrued, and that is carried on the balance sheet until we finish the project, and then we transfer it to the client. So here we are going to put in the value as this is now, which is the accumulated cost plus your profit for the year. This is what is going to appear in the balance sheet, 150. All right. So if you remember the journal entries, this could be probably, okay. Now this is not done in the books of the bank, but in Jeddah Construction. So you probably credit cash, debit, WIP, and here you will credit P&L and debit, the WIP 70, so you have to get 150. This will be done in the books of Jeddah Construction joint venture at Mudharaba. It will be done in the books of the joint venture of the Mudharaba, okay, which is a separate business entity. Now, going further, let's go to the second year. All right. So second year is what is the cost, accumulated cost? So we find that the accumulated cost is last is accumulated cost plus the cost which is incurred in year 2. So at the end of year 2, we will have accumulated costs of 120 million riyals. Okay. Now, how do you calculate the profit? Again, same formula. You take the accumulated costs divided by the total cost, which is 160. That will give you the percentage of completion multiplied by the estimated profit. So in year 2 is still not changed, the total cost. So we get this one. But actually, this is not the correct answer because we have already taken 70. This is the profit to date from year 1 to year 2. Since we have already taken 70 million riyal in year 1, we will have to minus the figure from the total accumulated profit to date, which is 105. So what I'm going to do here is to modify the formula to deduct the profit which is taken in year 1. Can you see that? So now we have 35. So using the formula, which is 60% of 35, okay, you will get 21. Okay. Now, here again, we fill this column. It will be needed in the next one, next year. So how do you do that? We just take the previous value of istisna work in progress plus, okay, cost incurred, not the accumulated cost, please, cost incurred in the year, all right, plus the profit which you have accrued. That will give 225. Once again, to get the value of the istisna work in progress, we take the previous year's figure of istisna work in progress plus whatever cost we add this year incurred plus the profit we have accrued. That will give us the value of the istisna. Do not take accumulated cost, then you'll be double counting. All right. Now we go on to the third year. In third year, we have a development, i.e., that is the third year the project cost went up to 250 million. Now here there is a possibility that we will end up in a loss-making situation. So what we have to do is we will have to compute the cash equivalent value of the istisna work in progress and compare it with what is already accumulated there currently. And we'll have to take the lower value of the cash equivalent value or the book value of this thing, which is the value of the istisna work in progress. This is nothing different because in accordance to prudence concept, we take the lower of cost or net realizable value. Cash equivalent value basically is the net realizable value. That is, we can sell the contract for 300 million and what is the further expense we have to make? We deduct it. So this is our net realizable value. So if the net realizable value is lower than what is the book value, then we have to bring down the book value to the net realizable value. So what we are going to do now is we can just accumulate the